So, I was talking about sometimes when there's a war, stock market rallies. Sometimes when there's a war, markets crash. Sometimes when there's a war, markets just it may start going down, but then by the end of the war, it's back to where it was. So it's just basically it's kind of flat over the however many years it takes for the war to start and end. It's just, whether it goes up and then back down or down and then back up. Like there's all these scenarios. But if one is to stand here these days and looking at the market while war drums are beating, Korea, North Korea, Syria, etc. We just dropped what they call the more something. What is it called? It's the biggest non-nuclear bomb ever made over in Afghanistan. Afghanistan. What? Afghanistan? Did I hear that right? I thought Syria, North Korea. You see where this is heading? So, since the saber rattling is becoming more than just saber rattling, and they're not just beating the war drums, some issues or some warlike actions have taken place. What has thus far the market? How's it been reacting? Dow Jones Industrial Average down 138 points today, which is the 13th, Thursday. So I might suggest that this time around, stock market is not going to be real happy about a war. The Economic Collapse blog has a couple articles that I think explain this, or at least can show this time around we may not be having either a flat market or a rally. I'm sure you may find the war contractors companies do well, but the market's generally not looking real good. And I think for the last couple of days, I want to say that I hadn't really looked. Let me see if I can just take a peek, because I don't want to, as they say in politics, I don't want to misspeak. Jason Nipor, you misspoke. So April 10th, from the 10th, 11th, 12th, let me just show you this chart. Just you can look at it yourself, just real quick. That's from that's a 5-day chart. Okay, we're talking 7th all the way to today, 13th. From up here to down here, markets are down. And this is all during the timeline, roughly speaking, of Syria conflict, North Korea. We may be getting ready to do something, So if that's a thermometer gauge, if you will, temperature gauge, I don't think the market's going to like this at all. And what a perfect reason. Again, the club loves a reason to give us. They always have to give us a reason. Why markets are down today because of a oil pipeline conflict in Kazakhstan that feeds the whole world 0.000000001% of oil. So why did oil jump on that? What? Nonsense. But anyways, this is pointing to potentially bad things. And if the markets go down, well, it wasn't our fault. It wasn't the Federal Reserve's fault. It had tools in the toolbox it was using. But the war caused this. This is an act of God. Even though the war cycle says 2017 is a highly probable time to go to war, going back decades. But forget about that. Anyways, let me get into this. The Economic Collapse blog with Michael Snyder. The Dow falls another 138 points as geopolitical shaking forces investors to race for the exits. Stock prices just keep on falling, and many analysts are now wondering if a full-blown stock market crash is in our near future. On Thursday, the S&P 500 and the Dow both closed at 2-month lows after Donald Trump dropped, that's what it's called, the mother of all bombs, in Afghanistan. It was the first time that one of these bombs has ever been used in live combat. And it is being reported that each of these bombs weighs 22,000 pounds. And here's the kicker. And cost $16 $18 million to make just one of them. How can we sit here with our president telling us, before any of this was an issue, just a couple months back, 3 months ago, we're going to really need to raise the defense spending to at least another 56 or so billion, and it's probably going to be a lot more than that, he said. And someone emailed me to say, well, Jay Snip, you understand he may not necessarily have been saying that because he planned on going to war, but our infrastructure is dying in this country, as we know. That's why he wants $1 trillion infrastructure project. But military, equipment, ships, everything is in bad condition. We need to have lots of repairs done. We also need to add new vehicles, machinery, equipment, etc., is what he was explaining to me. And that makes sense. So we need to just brush those guys, brush them off a bit, fix them up so we can get back to what we were, which was on a big decline ever since Obama took office. So that was the point he was making to me. But I do say, one way or the other, interesting timing. Would you not agree? Of course, Trump was trying to send a very clear message to the rest of the world by dropping this bomb, and investors interpreted it as a sign that we are getting even closer to war. The financial markets will be closed on Friday for the long holiday weekend, and with so much uncertainty about what may happen in Syria and in North Korea, many investors wanted to get their money out of the market, while they still could. My wife made some juice, with a, juicer, putting vegetables, a little bit of fruit. And that's what's coming up right now. The historic losing streak for the S&P 500 tech stocks extended to 10 days in a row now on Thursday, which is the night I'm doing this. And all of the major stock indexes are now below, their 50-day moving averages for the first time since the election. Remember the election, stocks rally, bank stocks super rally. Another thing looking bad right now, bank stocks. Bank stocks are not looking good. And so is this, not either. And the VIX closed above 16 to close the week, which many analysts saw as a sign that more market volatility is on the way. On Tuesday, I wrote about how geopolitical instability is causing many investors to seek out safe havens, such as, guess. I'll give you nothing if you guess this right because it's so easy. Gold and silver. And that trend continued on Thursday. As I write this, the price of gold is sitting at $1,289, and the price of silver is up to $1,850. Of course, if the French election goes badly for the globalists, or we see a full-blown shooting war erupt in either Syria or North Korea, those prices will go far, far higher. And by the way, isn't it amazing how quickly these little incidents across the planet, recently Korea, all that, Syria, all of a sudden Trump spying, the spying, hacking, gone, out of the news, gone. Boy, timing is amazing, isn't it? It's amazing. Breaking news story, people should be going to jail over this. It's now been wiped away because of this. And if a war starts, forget about it. You'll never hear about it again. The timing, coincidence? I think not. Of course, if the French election goes badly for the globalists, or we see full-blown war erupting in either Syria or North Korea, those prices will go far, far higher. For quite a while, I have been very strongly warning that these ridiculously inflated stock prices were not sustainable. It was inevitable that they would start to decline because the underlying economic numbers simply did not support them. And just today, we got some more bad news. According to Zero Hedge, the mortgage business at one of America's biggest banks has been absolutely crashing. And here's a little piece of that. When we reported Wells Fargo's Q4 earnings back in January, we drew readers' attention to one specific line of business, the one we dubbed the bank's bread and butter, namely mortgage lending, in which, as we then reported, was the biggest alarm because as a result of rising rates, even though they barely creeped up, right? Wells' residential mortgage applications and pipelines both tumbled. Specifically, in quarter four, Wells' mortgage applications plunged by $25 billion from the prior quarter, down to $75 billion, while the mortgage origination pipeline plunged by nearly half to just $30 billion, and just shy, that is, of the all-time lows recorded in late 2013 and 14. Fast forward one quarter, when what was already a troubling situation just got as bad as it has been since the financial crisis for America's largest mortgage lender, because buried deep in its presentation accompanying otherwise unremarkable quarter one results, EPS small beat, revenue small miss, Wells Fargo just reported that its bread and butter, mortgages, is virtually gone. And in quarter one, the amount of all important mortgage applications has tumbled by a whopping 23% to just $59 billion now, below the lows hit in early 2014 and at fresh lows since the financial crisis. The one that I keep saying that phrase over and over. Every piece of bad news I've been reading you lately. Such and such, such and such, since the last crisis. Haven't seen this since the last crisis. The last time these numbers were this horrible, the last crisis. All referring to 2008. But the debt, the bubbles, are massively larger this time around. And it's not just real estate this time around pushing everything. Auto subprime loans, massive credit card debt, bankruptcies are already up. The recession isn't even officially acknowledged. There's no recession right now. Bankruptcies, businesses and individual, way up. Again, debt creation, got to create $4 in debt to create $1 in GDP. I could go on and on. Unfortunately, that was into that particular article from Zero Hedge that they quoted. Unfortunately, what is going on at Wells Fargo is just part of an enormous loan collapse that we are witnessing all over the nation. Correct me if I am wrong. Did the WebBot reports recently, even going back to a little bit of that last year, tell us the credit freeze, credit drying up? And credit is loans. You get a loan, you get credit. That's what you just got, some credit. Correct me if I'm wrong about that one. Don't waste your time, I'm not. This is exactly what we would expect to see if a new recession was beginning. When economic conditions show, I think he meant slow down, banks and other lending institutions begin to get tighter with their money, and a tightening of credit causes economic activity to slow down even further. It can be exceedingly difficult to break out of such a cycle once it starts. But the mainstream media doesn't seem to understand these things. Instead, they are pointing the blame at other sources for the emerging economic slowdown. For example, consider the following excerpt from... Hold on, I'm about to throw up in my mouth. I don't want to throw up on you. Okay. From CNN, with an article entitled, "Americans Have Become Lazy, and It's Hurting the Economy." Americans have become lazy, argues economist Tyler Cowen. I think that meant Tyler Clown, not Cohen. They don't start businesses as much as they once did. They don't move as often as they used to. And they live in neighborhoods that are about as segregated as they were in the 1960s. All of this is causing the U.S. to stagnate economically and politically, Cohen says in his new book, The Complacent Class, The Self-Defeating Quest for the American Dream. Growth is far slower than it was in the 1960s, 70s, and 80s, and productivity growth is way down, despite everyone claiming they are working so hard. Sounds exactly like something the criminal news network, CNN, would say. No, our economic problems are not the result of Americans being too lazy. Rather, the truth is that we have accumulated way too much debt as a society. We have been way too greedy, and I don't know about we as in you and me, but I think we as in those at the top, if you know what I mean, have been a little too greedy. And there has been way too much manipulation by the Federal Reserve and other central banks. For decades, we have been living way above our means. We have been able to do this by stealing trillions upon trillions of dollars from future generations of Americans. And now a day of reckoning is rapidly approaching. Unfortunately for Donald Trump, he just happens, as I've said a million times, to be the president at this moment in history. And so much of the blame for what is about to happen will be pinned on him. And I've already said that before I even knew, any of us knew Trump was even running for president. I've been saying that for years. It does not, under any circumstances, matter who the conductor of the train is. It's going down the tracks that are predetermined. And whoever's in there when the times are good, that's cool. But when times are bad, you're going to look like an idiot. They're going to hate you, even though it was not your fault. Trump doesn't want to preside over a major decline in our standard of living, but ultimately this has to happen because this is the consequence of all this excess consumption that went on before he was president. You know, we sacrificed our future to indulge our past. The future is now the present. We're here, and it's time to pay the piper. Schiff, and that was, I think, Peter Schiff who said that, is precisely correct. For decades, we have just kept sacrificing the future in order to inflate our current standard of living. But the funny thing about the future is that it always arrives at some point, and now we are going to pay an enormously high price being so exceedingly reckless all these years. And again, it's not you and I and the American people being reckless. It is our government, the financial system, the banking system that writes the legislation that then gives a bunch of congressmen and women a bunch of money to get that sucker passed. You may know it as campaign contributions. I call it a payoff. And then we have to pay for their sins later on. Yeah, we deregulated. We shouldn't have done that. We should have done that. We were incompetent about that. Yeah, we misspoke at the time. I misspoke on that one. It was a bad decision. It's not you and me. It's our government and it's the policies. Their policies. And we don't have a choice. We have to go along for the ride on their coattails. Both good and bad. There's a freaking bug or something right on my... A little ant. Get over here. Got a riffraff ant playing the riffraff games with me. My people don't want to see an ant crawling across the screen. Come on. Speaking of, again, Dow Jones, S&P stocks, same guy, Michael Snyder, Economic Collapse blog. Tech stocks experience their longest losing streak in 5 years as panic begins to grip the market. Now, this was actually from yesterday, his article. But now that we had a 138 down day of Dow Jones, boy, oh boy. S&P 500 stocks, tech stocks have now fallen for 9 days in a row. The other one was 10 days, right? The last time tech stocks declined for so many days in a row was in 2012. Oh man, forgive me. I thought I was getting ready to hear the last recession of 08 and 9. No, but during another terrible time, 2012, when the market crash was just about at its lowest, 2012-2011 timeframe. Housing prices were at their rock bottom. And that was the only other time in history when we have seen such a long losing streak. As I've stated before, the post-election Trump rally is officially done. And the market is starting to roll over as investors begin to realize that all of the buying momentum has completely evaporated. Tech stocks tend to be particularly volatile, and so the fact that they are starting to lead the way down should definitely be alarming to many in the investing community. Of course, it isn't just tech stocks that are falling. The Dow has fallen down another 59 points on Wednesday. Again, and now Thursday, 138 points. Combined, 200 points. And the S&P 500 has closed beneath its 50-day moving average, for the very first time since the election. for those that have been waiting for a key technical signal before getting out of the market, there is one for you. The price of gold was up again, and that is definitely not surprising in this geopolitical environment, which is still surprising to me because the club rigs the price, as you well know. But last year, it took 40-something% more money thrown out the precious metals market, specifically silver, to keep the price down. As I said earlier, I can't wait to see how much money they've got to throw at that paper COMEX market in 2017 just to try to put a stranglehold on those prices. They knocked it down. It was already close to 1850. They nailed it, 1790 something. It came right back. And now it is, see ya. See ya wouldn't want to be ya. Even with these people manipulating. I will not be shocked, even kind of, if they nail it again. But if they do, it's going to be kind of surprising for one reason. That being, they just nailed it. Came back up. They're going to nail it again this fast, and it's going to come back up again? I bet it will. Just as fast. Where do people go? Safe haven assets. And it's been a while since I've looked at Bitcoin price, by the way, if you don't mind. Bitcoin, USD. Where are we at with Bitcoin? What's Bitcoin doing these days? 1173 currently. I think a few days ago it was like 1200, over 1200. And Dash Coin USD. Where are we at with Dash Coin? I thought I clicked that. Just curious. $72. Remember, it was like around 100 not that long ago. Down. It's actually, today it's up 8%. $72. But again, Webbot said, yeah, there may be some other coins out there that do okay, but you're going to want to stick with Bitcoin, according to the Webbot. And it's been very, very, very accurate with the Bitcoin movements. And if it's correct, and again, it has been so far, and if it's correct for next year, $13,000 for a single Bitcoin. Interesting, wouldn't you say? Well, anyways, off to the next video. Take care.